How's it going, everyone? Just wanted to hop on and do a pretty informal review of a trade that I took today. We're actually in the middle of a moving process right now. So I'm here in the office with no furniture and no desk to sit on. So I'm kind of redefining what it means to be on the trading floor. Anyway, let's get into the trade. Pull up my screen share here. Okay, so here we go on NASDAQ. We talked about this just the other evening on the midweek market review. We started to reach up toward the buy side up here, took out the previous week's high this week, trading above there, but had yet to reach up into the buy side, which was the monthly target. If I take a look on the monthly chart here, going back to the weekly, since we didn't reach up there, we can come back and retrace into a higher time frame inefficiency, which we have right here on the weekly chart. Separation between this candle's high and this candle's low is the weekly BISI. And then if you go onto the daily chart, why it makes sense to trade back down here toward this weekly BISI is because here we had a daily BISI right here, Tuesday, November 14th. On Thursday, we traded into it and then started moving away up above Wednesday's high and toward the buy side, but you'll see no new buy side imbalances were created here on the daily chart. So all of these candles and wicks overlap with no new BISI like this being formed within here. Then on Wednesday of this week, we ran out the previous week's high, failed to reach up to the buy side, and then closed back inside the range. So what that tells me is we're moving into an inefficiency, but failing to displace away from it. So that leaves the opportunity for a higher time frame inefficiency. This one's on the daily, but a higher time frame inefficiency being the weekly, which we saw here, to be created and for price to trade back into there before reaching up to the buy side. So this is more engineering of buy side liquidity, right? This begins to appear as a double top to retail traders. So they get short, put a buy stop above these highs to protect themselves. And all that's happening is price comes back down into an inefficiency and then works up to the buy side to purge those buy stops and that liquidity resting above. So back here on the daily chart, you can see kind of what I was looking for in terms of today's trade. This was today's candle. It's still developing. It's only 2:42 right now, so we got about an hour and 20 minutes left in the trading day. But you can see we ran up into the wick of the previous candle and then started working down into previous daily candle lows. So there's sell side liquidity or sell stops resting below those candles from Tuesday, Monday, and then Tuesday of the prior week. I have those all marked out with the red lines here. And then this gray shaded area here is what you see on the weekly chart as the weekly BISI. Dropping down into the 4-hour, a couple things highlighted here. So those are those same daily levels we had marked. And then right here is a 4-hour BISI. So between this candle's high and this candle's low, the buy side has been delivered, but sell side or a down candle has yet to be delivered into this area. So there is where price can go to when it trades below these lows. When we're looking at liquidity, you want to see how far it could potentially trade beyond that area, right? Yes, we can reach to this low and this low and this low, but beyond that, we can reach to an inefficiency, which we have right here. And then we have the weekly inefficiency resting below. And so the trade idea that I had was this morning, price trades up into a 4-hour city right here after that weekly high had already been run out. So the city is this low, this candle's low to this candle's high right there. You can see on the 6 a.m. 4-hour candle running up right to the midpoint of it, the consequent encroachment, and then starting to drop down toward the sell side under these candles lows and toward the 4-hour buy side imbalance right here. Then dropping down to the 1-hour, you can see new displacement, new inefficiencies occurring within here. And then the 4-hour is where the framework for the trade really came in, or excuse me, the 15-minute. So here on the 4-hour, that's that 4-hour SIBI that we saw up there. This is 8:30 when it reaches up into there. And then I'll turn on my executions here. You can see those executions. So the idea was just that price would reach for the 4-hour BISI down here. And all I'm doing is following the inefficiencies along. So here, price trades into the 4-hour SIBI up here, drops down, price reaches into a 15-minute SIBI right there between this candle's low and this candle's high, continues to drop. And this is the 9:30 candle, so New York AM session equity open right here, creates a new 15-minute inefficiency here. And then as price trades up into that one, that could have been my sell immediately right there, but I was looking for a bit more of a low risk option. And so I waited and went down to a lower time frame here, and waited for a new SIBI to be created after price trades into this 15-minute SIBI right there. And so you'll see that when I jump down to the 4-minute right here. And then I'm looking to exit right here at the 4-hour BISI, which you can see the exit right there. Okay, so I'm going to jump down to a 4-minute now, which is where I actually took the trade. And you'll see it's the same idea once again, right? Price trades up into the 15-minute SIBI, running out a short-term high right here, and then dropping back lower, displacing and creating a 4-minute SIBI right here between this candle's low and this candle's high. And right as price trades up into there, I'm hitting the sell button. A little bit of a entry just outside of it, but that's okay. Hitting the sell button right there, and then looking to cover at my target down here at the 4-hour BISI right there. So you can see all I'm doing is flowing through the time frames, right? Starting with the highest time frame, the weekly, the daily, down to the 4-hour, and then working through that hourly and 15-minute chart to identify what inefficiencies remain above price to work down toward my target. And the reason we have to work from the higher time frame down to the lower is because if you just focus on lower time frame inefficiencies, like the one that we see right here, you can get lost in the price action. Because just like we see on the higher time frames, within these lower time frames, price can still retrace into a superior time frame inefficiency, right? So here we're on the 4-minute chart right here, and you have a SIBI right here. Why does price trade through it and reach back above this high instead of trading down here? Well, it's because a 15-minute SIBI was created on this candle. This last candle here was establishing the final 15-minute candle of the SIBI above here. So there's a small SIBI in there on the 4-minute, but price can trade above it to reach into this higher time frame inefficiency up here, and then drop down to the target. All right, so that's pretty much it for this trade review. I'll just turn on executions real quick so you can see the actual labels. There we go. So selling here at 15,961 3/4, just under that 4-minute SIBI right there, and then covering it back here right at the high of that 4-hour BISI at 15,887.25. So right about roughly 80 handles or so. Yeah, roughly 80 handles. And my stop placement on this was just here above this candle body right there. So I'm allowing for the whole inefficiency to trade, and then I'm allowing for the consequent encroachment of this wick as well. So if you look at the midpoint, I would allow for price to trade all the way up to the midpoint of that wick, which is right there at 15,973. And so my stop is remaining up here. All right. Well, that's it. I hope you enjoyed the trade review. Let me know if you have any questions. Drop them down in the comments and I'll try and get to them. And if you haven't already, join us at firsthandtrading.com. We got a lot of great stuff going on there. We got our weekly calls going and our midweek market reviews, which is what hinted to this trade today. So if you come in and watch those calls on Sundays and Wednesdays, it can help build the framework for what you might do during the actual trading week. So as always, be safe, be responsible, and talk to you soon.